Hey, Jeff Carlisi here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuned in to Traders. My pleasure to have back with us once again Brad Williams. He's president of Brad Williams Financial. Brad, welcome back to Traders Nation. How are you today?
Great. I appreciate you having me back.
Sure. Always a pleasure, Brad. Hey, listen, yesterday, Dow, whoa, Nelly, what a big day on that. Saw a tumble of 830 points yesterday. Were rising rates the culprit on that, or the thought of that? What's your take on it?
Well, I think rising rates were a good part of it, and then, of course, the unsettled dispute between us and China. And, I think a lot of people are getting jittery. They remember 2000 and 2008, and they may be, some of them taking profits off the table, kind of playing that game. But rising rates didn't help at all.
Right. So let's talk about this. So the economy's running pretty hot, okay? And fast enough to kick up inflation pressures is what we're seeing, and the need for Fed policymakers to rise those rates. And what are your thoughts on that, Brad?
Well, we've been in an artificially low-rate environment since the crash in 08, really 09. It really kicked up with the quantitative easing. Yeah. And I agree with you. We've got to get our rates back to normalcy. The problem is the Fed's got to unwind a massively large balance sheet that they accumulated over the last 9 years, and that's going to be it's one of those balancing acts. You got to get things back to normal, but you got to be careful doing it. And there's going to be these ups and downs that come as a result of that.
What do you think as far as mitigating the pain when it comes to that? Because traders are certainly jittery, like you said. They're like cats claw on the ceiling, Brad. Are they going to be able to mitigate the pain? Because the Feds do have to at least raise those rates at a certain period of time. Historically, we're at those lows forever, Brad.
Right. Yeah, and one thing we got to be careful of course, Japan has been in the doldrums for a long time because they did the stuff we did. You think you would learn from history, right? But I guess we're condemned to repeat it.
Yeah. All right. So let's talk about confidence. I want to move on to that because certainly consumer confidence. What a boom. Prosperity's in the air. Businesses, feel like they're not going to be blindsided by regulation, taxation, at least at this point. Repatriation of trillions of dollars back into the U.S. economy. Businesses are looking to grow. They're looking to expand. They can finally come up with a budget and come up with a plan to grow their business out without really the federal government getting in the way. Your thoughts, Brad?
Yeah, I think you're right on target. It's having a clear view of what's over the horizon that's important.
Sure.
And the last year we haven't had that because we didn't know what kind of regulations or taxes were coming next.
Yeah.
And now that they've got a fairly stable environment, they can make long-term plans. It's often said that America thinks in quarters and Japan thinks in decades and China thinks in centuries.
Sure.
And, there's something to be said about that. Now that when a CEO can plot out the next 4, 5, 6 years of what he's going to do, he can make those kind of growth decisions they're making now that they couldn't before.
All right, and that transcends down into the employee base. So employees start feeling good. So if they feel confident what their job is holding up, 2, that their pay is actually doing well or better, 3, the bonuses are rolling in like promised. So then you got employees out there that are looking and say, hey, it's getting better. I think I'm going to spend a little dough. Is that where the consumer confidence is coming in?
I believe that is exactly where it's coming in. I look at my daughter. She graduated 4 years ago from Auburn and got a degree in mathematics, and she is now working and getting promoted. She's got a great promotion. Her and her husband are optimistic, just bought a new car. They have a house. They're very stable financially.
Sure.
But they're able to say, hey, this is what we look at the short and medium term, so we can go make these decisions and buy things and do the right things and put money in the 401k like you should.
Sure. Is there such a thing as too much confidence? Because, listen, we don't want to – consumer confidence is great, but consumer debt is also an issue, Brad.
Yeah, confidence, like you said, you've got to be careful. When people are like back in the mortgage crisis where they saw houses values were going to continue to go up, so they leveraged themselves into the hilt, got as much loan as they could because, hey, the house prices are always going to keep rising. That's where that overconfidence comes in, and that's where your crash gets. Having confidence because you can think good things happening at your company and in your country, that's a different thing entirely.
Do you think as Americans we've learned, as consumers, we've learned from the last crash? Do you think we're going to be a little bit more prudent with our dollars? Confidence is great. Spending is okay, is great. It's what drives the economy. But do you think we've learned that maybe we really don't want to put on too much debt, that maybe this time around we should be saving a little bit more, Brad?
Yes, I do, and I go back to my daughter. That's what her and some of her compatriots are doing, is they're starting to look more about, hey, how can I invest money? How can I put money away? You know, they see what happened while they were in college to their parents and all that, and they don't want that to happen to them, and that's our new generation, and that's, you know, they're the future. And so, you know, as we get close to retirement, we need to be more conservative. Well, you know, it's doing the right thing with your money and making sure that, you know, if you're taking on debt, it's reasonable and you're not just saying, hey, I can afford it, let me pay it.
Yeah, do you think consumer confidence certainly is going to be strong? You see that spending continuing to go as we close out this year and into 2019?
I do. I just feel that's coming, and I look around. At least in my town, there's a lot of construction going on. There's a lot of home buying going on, and so, you know, when I talk to my realtor clients and realtor associates, they say, hey, the market's good here. So can't vouch for everywhere else, but I look at the national trends, and it reflects what I'm seeing here.
I got to tell you, Brad, here in Phoenix, and that's where I'm at. Here in Phoenix, I'm loving the fact when I'm driving around, because I drive in all the different cities, I'm seeing projects going up. I'm seeing commercial buildings going up. I'm seeing residential housing going up, apartments going up. And certainly that's a good trend that I like to see that you just touched on, Brad.
Yes, it is, because that's the future. And if an investor is going to put money in a project, it means they have an optimistic feel. So the problem we've had the last 9 years is that people were reluctant to do that because they just did not have a good feeling for the future.
So let's talk about investing for the future with some of these consumers. What are the best ways that they can approach investing? Certainly they're going to spend, but how are they going to save?
Well, I mean, you've got to build a plan based on your age, based on what your goals are, being in the market, you know, using some fixed income. It just depends on your age. I deal with those closer to retirement, so I tend to be a little more conservative than other advisors. But younger people need to be looking at the fact that it's all about risk and time. And so if they've got a lot of time, don't time the market, just be in the market. And when you're older, then you need to start de-risking your portfolio and start looking at income generation versus growth.
So age really here depends on your risk tolerance, right? I mean, you can, as you're younger, you can afford a little bit more risk, if you will, and then start tapering that back as you get older, get into a little bit more flight to quality.
Yes, that and income generation, because in retirement you're replacing the income that you're not generating anymore. So you can't be looking at growth to fund your retirement in total. You got to be looking at things that are going to provide you income.
Right. Okay, we're almost out of time here today. Brad, do you have any tools? Is there a website that folks can see for you, Brad, over Brad Williams Financial Services? What do you have going?
Yeah, I've got a simple way to do that. If you got a financial question, you just ask Brad Williams. So go to AskBradWilliams.com.
AskBradWilliams.com. Parting thoughts here today for you, Brad?
Well, I just hope we continue through the end of the year and that things keep going. Yeah,
I agree with you. It feels good. It feels good. We were such in stagnation for a long period of time. This economy right now feels good. All right, AskBradWilliams.com. AskBradWilliams.com. Head on over today. Hey, Brad, thanks for your time today. Appreciate it.
Hey, thank you for having me again.
You bet.
Have a great day.
You do the same. We'll be right back.